Did you hear about the new checking and savings feature from Robinhood? Is it safe? Is it a bank account? How can they afford to pay 3% when most banks are paying 2%? You have questions, I have answers. Hey everyone, I'm Bill Winterberg, founder of FPPad.com, and today I want to talk to you about the new announcement from Robinhood, which is the checking and savings feature. But first, some important disclosures. I do not currently have an active Robinhood investing account, nor do I have a Robinhood affiliate account. So if you choose to sign up with Robinhood, I do not benefit in any financial way for you taking that action. I also do not actively work with any companies that might be viewed as Robinhood's competitors. So that includes online trading accounts or online brokerage accounts that offer similar services to the ones that are offered by Robinhood. So if you are interested in my conflicts of interest, I do make that available at any time. You can check it out on my website. It's at fppad.com/disclaimer. All my conflicts of interest are listed there in plain text, so there's no doubt about who I do business with in the financial services industry. So with that out of the way, let's figure out what checking and savings is. If you look on the Robinhood website, they say right at the top that you will earn 3% on your money, you'll pay no fees, and you can access more than 75,000 ATMs nationwide. A little lower, it says that you can use the feature to pay bills, send and receive checks, transfer money, and set up direct deposit all from inside the Robinhood app. There's also a section on trust, and that's where Robinhood says that every Robinhood account is SIPC insured, or SIPC, up to $250,000 in cash and protected by modern encryption. So naturally, with the announcement of this new feature, the financial press picked up on the news and sent it out there. And there were some very interesting titles and headlines that these companies used. For instance, Forbes said that Robinhood is the latest to disrupt traditional banking. Reuters ran a headline that said, trading startup Robinhood branches out into US checking and savings accounts. But I believe the best headline came from Bloomberg that says Robinhood will offer checking service promising 3% interest. So this sounds all great, but I talked about the checking service being part of the headline that I liked. So there's a couple of things that I feel aren't being totally addressed, and this is why you're watching this video. So first up, Robinhood, the checking and savings, it's not a bank account. Robinhood is not a bank, it is a brokerage firm. So if you go to the page and down at the bottom and look at the fine print, you will see the disclaimer that says checking and savings is an added feature to existing Robinhood accounts and is not a separate account or a bank account. So why is this important? This is important for a couple of reasons. First, there is no bank regulation on the checking and savings feature. So the regulation includes state regulators by the state in which you live, as well as the Office of the Comptroller of the Currency, or the OCC, the Federal Deposit Insurance Corporation, the FDIC, as well as the Office of Thrift Supervision, or OTS. So since the checking and savings feature is not a bank account, that means that the money in the account is not insured by the FDIC. What's the FDIC? It's the Federal Deposit Insurance Corporation, which is a U.S. government corporation, and they provide insurance to depositors like you and me. So FDIC members, which are banks, they pay premiums into the funds at the FDIC, and the FDIC uses those premiums to provide insurance on covered deposits in the event that a bank fails and doesn't give money back to depositors. So that's you and me who can't get money out of banks. The FDIC steps in when a bank fails and makes us whole. They give us our money back, which comes directly from those deposits and those premiums paid by FDIC member companies. So it's a little bit confusing on what coverage there is in the Robinhood account, because Robinhood is using the terms checking and savings, which, if you ask me, those are terms that I recognize at banks and credit unions. That's a little bit confusing language, or language that I find confusing, that it might lead to incorrect assumptions by you and me, and that raises a red flag. Number two, okay, so if it's not a bank account, what is it? Again, if you go to the bottom of the website, you'll see that Robinhood Financial LLC is a registered broker-dealer with the Securities and Exchange Commission. So you're opening a brokerage account when you apply for this checking and savings feature. Brokerage accounts are different than bank accounts because they're subject to different regulations. The regulations that are applied are coming from the Securities and Exchange Act of 1934, so brokerage accounts are regulated by the SEC. Also, brokerage firms must be a member of FINRA, or the Financial Industry Regulatory Authority. FINRA is a nonprofit, non-governmental, and self-regulatory organization that has the power to create and enforce industry regulations and standards. So it's kind of like a group of fourth graders who run their own treehouse. I wrote this note so I wouldn't forget. And they have the power to set the standards of what approved treehouse behavior is. So they collect money from all their treehouse members, and if anybody gets hurt because of the actions of a treehouse member, they can use that money to compensate that person who was hurt or somehow injured. So also a self-regulatory organization, they enforce the regulations of their own conduct and membership. So for example, a treehouse of fourth graders might say, "No girls with cooties allowed." Okay, so you're asking, what's the big deal with brokerage accounts? Well, brokerage accounts involve investing, and most of us are aware that investing involves risk. The other important distinction is the insurance that's offered for brokerage accounts. So again, if we look at the fine print on the Robinhood site, Robinhood says, quote, "Every account is SIPC insured up to $250,000 of cash." But okay, you have to read more into the fine print because the fine print says that that is for claims of cash. So the SIPC is really there to protect the custody function of the broker-dealer, which means that the SIPC works to restore customers their securities and their cash that are in accounts in the event that the brokerage firm has to shut down and liquidate all the customer accounts. What the SIPC does not protect against is the decline of value in any of the securities you own in your account. So to top things off, recently the CEO and president of the SIPC went on record to say in a Barron's article that, quote, "SIPC protects cash that is deposited with a brokerage firm for one limited purpose, the purpose of purchasing securities. Cash deposited for other reasons would not be protected." End quote. In my opinion, the ambiguity over what is and is not protected in this feature called checking and savings in a Robinhood brokerage account is what raises another red flag for me. Number 3, how does Robinhood manage to get 3% interest on your money? Well, we don't actually know. When a bank offers you interest, they're usually offering it under an APR, and they state that clearly. And when they offer that APR to you and they change it, they're required to notify you what the new terms are of the APR in that bank account. So what do brokers typically do since we're talking about brokerage accounts? Well, most brokers give you 3 options, and you, the account owner, decides which option you want to select when you open your brokerage account. So for example, if you open up a brokerage account with TD Ameritrade, your first option is to choose an FDIC insured interest-bearing account. It's typically with a program bank affiliated with the broker, and the broker will sweep or move your cash out of the brokerage account and into an account with the program bank. It's FDIC insured, and you receive the prevailing rates that are offered by that FDIC institution. The second way is to choose the sweep alternative. The sweep alternative is cash that is kept in the brokerage account that earns simple interest. But it's important to read the fine print because the fine print says that that is intended as a place to keep your cash pending investment and not solely for the purpose of receiving interest. The third option you can choose is a money market fund. Now, a money market fund comes with a prospectus, and that prospectus details the risks, fees, and objectives of that money market fund so that you are informed on what the money market fund holds in terms of stocks and securities and bonds and treasuries, and what the estimated rates of return and interest paid to you are. It's all disclosed in the prospectus. So that's generally what you choose when you open up a brokerage account. So far, I haven't seen any prospectus information from Robinhood that covers what is actually used for this checking and savings feature. So without a prospectus, we don't know what is being used to generate 3% interest. You just have to take, at this point, Robinhood's word for it, which is why it raises yet another red flag for me. Number 4, I think that there's a little bit of false equivalence going on here. So let's look at the page again. Robinhood compares their checking and savings feature to other cash solutions like the Fidelity Cash Management. But if you look at the fine print for Fidelity Cash Management, the cash balance in that Fidelity Cash Management account is swept to an FDIC insured interest-bearing account at a program bank. So it's not the same thing as the Robinhood checking and savings feature. If you look at the Bank of America checking and savings that they outline, it's also another FDIC insured interest-bearing account. So I think you get the idea. The content and the copy on the Robinhood page is comparing its brokerage investment feature called checking and savings to these FDIC insured bearing accounts. I don't know about you, but that's like taking a pound of tofu, adding red food coloring, and putting liquid smoke on it and saying it's just like steak. I mean, it's red, it smells like steak, therefore it's just like steak, only better. I don't think that's the right comparison. Time to bring it all together. It's clear that this account is not a bank account, but a brokerage account. And that means that different rules and laws and regulations apply. That's not necessarily a problem, but what's particularly troubling is some of the marketing and the language that is used. Robinhood uses the phrase checking and savings. And so when you hear checking and savings, you're probably inclined to think, oh, this is just like a bank account, when that is not the case. This is a brokerage account, and brokerage accounts involve investing, and investing involves risk and the potential that you won't get 100% of your money back. Robinhood also doesn't disclose exactly how they get you 3% interest. When you look at all the other brokers, they have tightly regulated documentation that is explicit about how they generate interest and yield and returns and give that back to their brokerage customers. Finally, it is unclear about what the SIPC insures and covers. What is cash? What is a claim for cash? And does the money in the checking and savings feature count as cash, or does it count as an investment? So until we can get clarity on several of these concerns, I won't be moving forward with opening up a Robinhood account. Now, I can't tell you what you should do, but if you found this information useful, you can now make an informed decision about how you want to proceed with Robinhood. And that said, if you found that this video and this information was helpful to you, I would appreciate it if you hit that thumbs up button. Please subscribe to the YouTube channel, and if someone else can benefit from this information, hit that share button and send this video link right over to them. For FBPad.com, I'm Bill Winterberg. See you next time.